You are listening to ChartingWealth.com for Thursday, the 29th of October, 2015. What's the market been doing since, say the 5th of October? It has been running up. Couple of pullbacks on our two-day chart on the 15th and on the 21st of October, but the market continues to surge upward, went up even further today. We always start our reports, our podcasts, with the IYY, which is a total market index fund. It's an exchange-traded fund put out by iShares. Tracks the whole market. We like to see the big picture to begin with on a big chart. That is the two-day chart. What do we see? Well, we see continued up movement above our two-day trend line. We have a nice candle for the last 2 days, and we have even a wick on top, which means the market had moved even higher and then was pulled down to close. We have our Bollinger Bands that originally came in pretty tightly around the 21st, but now have expanded as the market has continued to move up. Let's revert to our shorter chart. For those of you who listen every day, you know we look at the 2-day and the 4-hour or half-day chart. The half-day chart shows us, and we talked about this yesterday, the market digesting some gains, which it did over the 2 prior days, the 26th and the 27th. And then what happened on the 28th? Well, the market moved up, surged upwards. Now we see that, of course, we currently have, and hopefully if you got into the market, you got in somewhere around the morning of the 23rd and watched the market as it continued to move up, you might have gotten a little nervous over the 26th and 27th as we saw it digest some gains, moved up a little bit in the afternoon on the 26th, and then over yesterday, and then surged back up again today. We do see the derivative oscillator has rotated over. That's an interesting move. Even though the MACD on the short chart has moved up, derivative oscillator has moved down. So continue to pay attention, watch that. Again, the main indicator we use is the MACD, the moving average convergence, divergence. You don't know what that is? Go to our website, chartingwealth.com, check it out. You can also look it up on Investopedia or just do a Google search. But it is the indicator that we like the most. And again, we keep it simple. Here, we could use a million different indicators. You get yourself so confused you'd never make a decision. So we have a training package, a training technique that we use. If you don't have it, you need to get it. All you have to do is email us at CWealth, that's as in Charting Wealth, CW at chartingwealth.com. Ask not only for a 15-minute how to read a stock chart video, but also ask for the layout that we use here at freestockcharts.com. We'll send you the Charting Wealth layout. Now, let's go from IYY, the total market. We're going to go to another large index, not as large as the total market. That's the SPY, S&P 500. This is another ETF, an exchange-traded fund that tracks that. Looks very similar most days to the IYY because the S&P 500 big companies make up a lot of the volume. So we do see pretty much a similar trend, continued up movement, market continuing to surge up over the course of the last 6 days, 3 two-day candles. If we revert to our 4-hour, half day, we see basically the same thing, although we do see, interestingly enough, a bit of a down wick on the candle for the end of the day, which is always interesting to see on upward candles. That means that the bears were able to pull the market down as opposed to the bulls pushing it up the entire time. Now we see that we are continuing in a short-term up movement paralleling the long-term up movement. So that is good. Derivative oscillator heated up a little bit, and we saw a divergence. That is a splitting apart of the blue line on our chart, which represents the MACD, and the red line, which is the signal line. So again, we've got confirmed up movements on both our short, that is our 4-hour, and our long, our 2-day charts. Now, let's go back to our 2-day chart. We're going to take a look at our last index before we go to gold, and that is the Qs. What's the Qs of the cubes? Well, that is the NASDAQ 100. It is, again, another index that helps us look at what's going on with that index, that basket of stocks, and we see that it continued to surge up. It had stayed, again, it's only had one day where there was even an open red candle. That was on the 21st. Continued to move up since it crossed over on the 5th, the 2-day candle on the 5th going up, and it continued to surge up today. It was out of the Bollinger Bands yesterday, which are the volatility bands on our charts represented by blue dashes, and it continued to move up over the course of this day. The last 2-day chart. If we revert now to our 4-hour chart, we'll see what it did in the morning and in the afternoon. Again, the market continued to move up. We have seen a little bit of tightening and of the MACD and the signal line, so a little closer together than it was, say, back on the 26th of October. And we've seen also derivative oscillator losing some of its speed. So continue to watch it. Hopefully you got in when it crossed over back around the afternoon of the 22nd, and you've ridden this nice train ride all the way up. That is the way to do it. One reason I love the Qs so much is every dollar is a strike price. If you're engaging at all in any options trading, or you're just buying the Qs. And again, what do we talk about here? Not actually purchasing the real ETF, but getting in there with your virtual trades, learning how to trade and making your own decisions. We do not give market decisions. We are not a stock calling service. We're an education company. But that is, again, that's what we teach, getting in around the afternoon of the 22nd. You would have done quite well just buying the Qs virtually or buying a virtual call option. Did quite well. Okay, lastly, we're going to revert back to our 2-day chart. We're going to look at gold. Gold is technically for the day down 0.81%. We have on our 2-day chart something we call, it's a cross, it's almost a doji, which means that the movement throughout the course of the 2-day chart on our Hinkin Ashi type of candlestick that we use. And again, encourage you to look that up. It is the best candles to use. And those of you who don't know what Japanese candlestick trading is, we've got some great training at the website chartingwealth.com. Please go listen to that. I've not yet done a training on the Heikin Ashi, and again, I'll spell that for you, Heikin-Ashi. That is the type of candlesticks we use. Love them. And what we see when we see this type of pattern, though, of a cross or a doji, is a lot of indecision. The bulls were able to drag the market down as much as the bears were able to drive it up, and the market price settled right around where it opened. That's very important to pay attention to. Looks like the 2-day chart is coming together. Derivative oscillators lost a lot of its speed, but what do we really pay attention to? We do like when the small chart parallels the big chart, but in gold, we primarily pay attention to our 4-hour chart. And what do we see happening? Very interesting what went on with gold. We saw gold rotated over, going down, and again, those of you who are a little bit more sophisticated in your training know that there are inverse gold funds that actually go up when the price of gold goes down. So when you see a crossover going down, you can either get out of gold. Hopefully you would have gotten out before then. There are other signs to tell you when to get out. But to get in, you see the 4-hour chart crossing over, going down, and gold, of course, did what? Well, continued to move down sometime around the 19th of October and surged down over several days and then sort of flattened out starting around the 23rd. And then, but the derivative oscillator continued to, well, it started losing some steam, but the MACD continued to move down along with the signal line. And then sort of bizarre today, there was a pop-up in the morning and then a move down in the afternoon, and gold actually reached all the way down to something like 110.32. Now, if you were in gold, you may have had set a sell price, maybe a good till canceled sell order to make money on your inverse fund if you had that set up at a certain percentage gain, or if you were in some type of option, you might have actually made that low and actually done quite well on it. But regardless, Really interesting what happened to gold throughout the course of the day. Technically down 0.81% for the day. We've got sort of a kinked curve here on our derivative, on our MACD. So gold, very interesting. Still in a confirmed down move on the 4-hour chart. That's what we pay attention to, but keep your eye on gold. We've got a complete reverse in the morning. We saw the derivative oscillator pop up a little bit, in the afternoon pop down. So gold is in an interesting position right now. So pay close attention if you were in a down move. Hopefully you capitalized on that big drop in the afternoon and got your position sold out and made a nice penny in your virtual account. Folks, that's where the market ended up on Wednesday as we go into Thursday. Hope that you are having a great week trading. Please continue to listen to us every day. Follow us on Facebook and Twitter, on Instagram. We love to hear from you. Please keep up with us. Again, chartingwealth.com. Sign up for our newsletter. Let us hear from you. If you would like the layout or you would like the 15-minute how to read a stock chart video, it's free for asking. All you got to do is send us an email, cw@chartingwealth.com. Thanks so much. God bless. Wish you the best in your trading.